Hey, it's Matt with PriceActionTradingSystem.com, and it's Tuesday. It's March 25th. This will be our chart lesson for the day, and you can see we had another positive day. Not a very big day, and it looks like it was a bullish day. It was in the fact that we closed up and closed higher, but mostly it was sideways today that closed near the highs. I don't even think we closed near the highs of the range. I guess we did close near the highs, but I think a lot of that movement came after 2:30, probably after 3 o'clock. I'll refresh my memory when we flip back over to the chart. But you can see we almost made that measured move, and that was my guess this morning that was probably going to try to be our next target at a minimum. Now we could continue higher. Don't get me wrong here, but a measured move is probably um, a good target for now. And we still didn't quite get there. The high today was 58.37 and a quarter. And so not quite 10 points. And you can see that target is 58.44.95. So let me make sure that's what that is. Well, I take that back. That is not what that is. That's close, but that's not really what we're. Let's put a 58.44.50. It's real. It was pretty dang close, actually. Actually, I didn't quite have it on the lows there. It might need to still be just slightly lower, like right there. And that gives us 58.43.75. So uh, that was my near-term target if we continued higher. Didn't quite make that today. We'll see if we could turn into that in the trade up to that in the overnight and then turn back down. We could keep going higher. But notice on this green, I mean, there could be a flatter. Let's just go ahead and draw it just in case it turns out to be there and we're kind of prepared for it. I would say this would come right across here. So it could be that's the channel. We may not have a break yet. So if that's the case, we could come all the way back up here and test the highs of this. But right now, that was our first target. If we continue through there, I would say this would be our next target, testing this uh, the the lower part of the range. So we'll see what happens. Um, but there it is on the daily chart. Let's flip over to the. It doesn't look quite that bullish on the intraday chart, but let's flip over there. And here it is. And you can see it's just sideways today. Here's the overnight lows, the overnight highs. We did break higher momentarily and fail, and then trade back in. And we just kind of traded around that midline until into the close. Then after about almost 3 o'clock, then we trended higher again. So once the volume kind of thinned out, the prices trended out. We didn't quite make it back to the highs either. So, uh, but you can see we spent most of the time testing that close from yesterday. We never could really sustain a breach of that. We pushed through it a couple of times, but each time we'd come back and we ended up testing it a couple more times before prices went higher. And that's what prices do. They test support and resistance. We tested this resistance up here several times and got a failed breakout and traded down. And then this tended to be, for most of the regular trading day, this yesterday's close, which is what this dash red line is, tended. You'll see this a lot. You'll see the opening prices tend to be an important price point, and then the close from the previous day being an important price point. So watch those. I mean, I keep those lines on there all the time, and they become very important. So, and you can see that tended to be the line in the sand to the downside today. And we breached it a couple of times, but never could sustain anything, and we went higher. So let's zoom in here and go through the trades. There's not a lot of trades today, unfortunately. You had to be patient this morning too. 7 o'clock came. I think it was right in here. One of these bars. Yeah, right there. So 7 o'clock came right here. We had a little pull, but we were still in this channel. We did have what looks like a mild overshoot, and that's not a real convincing close on the other side. So, if it keeps going higher, I wouldn't pay much attention to that, which it kind of does. So, um, but we got a first entry there, we got a first entry here, and then we turned down up here, and then we made a lower high. But that's just a first entry. It did break higher. I think you could argue there's a triple test. If you did see the triple test, maybe you take that. Um, you can see we tested that level right across here, and then we tested it, turned down, turned back up. I mean, it's not perfect, but if you saw that, and it did break higher and turn down, so you could enter that on the engulfing bar if you wanted to. If you waited for this to close, it's a fairly big bar, 17 ticks, something like that. But you can see the volatility's really slowed down a lot. Not near as much volume, not near as volatile. The bars are getting a little smaller. Because that would have, a week or two ago, that probably would have been a 35 tick bar. Now it's 17. But we push on down. You got a trend working up. Close outside with the first entry. We made a new high, and so when it broke below that little 2-bar matching high, that's a second entry. But that's too congested, not a good enough signal bar, so you really can't take that. Comes back here, close outside, new high, and again, the signal bar is not any good. I mean, everything plays out perfect. This confirms that trend line with the third touch. And just to clarify for anybody that's new, a trend line is not confirmed until it has 3 touches, and there's your third touch right there. And there is a second entry, but that signal bar doesn't qualify, so no entry there. And then it comes back, and there's another first entry. It goes higher, and so when it comes back past that, the bottom of that big greenish engulfing bar, that's a second entry. But again, that signal bar, it doesn't qualify. And again, you do get a close outside. You do get a new high. It does turn down at the key entry point. So you just have to kind of keep waiting. It's unfortunate that you're getting those second entries and you're not getting a signal bar. But by all means, if you had a good signal bar here or here, take those trades. And, I'll see people that'll, because they see these work, they'll start trying to trade these signal bars, and next thing you know, they have a loss. And don't do it. Follow the rules. If you follow the rules, you're going to have more success. Yeah, you're going to miss some trades. You're going to filter out a few good ones, but you're going to filter out a lot of bad ones. So trust me on that. Here's another one. We finally get a break here. Notice how we came up short those last couple of times. That's telling you we're getting close to, we're running out of momentum to the downside. We're not running back to the other side. And so we're going to probably get a break soon. And there it is. Then you get a close outside, a new high, all in one bar. I think you could take that, but I think it's just a little early. You do get the close outside. You do get a new high. I just think you need to wait on a lower high. Maybe you take that. I mean, you might argue there's a double top right there. If you'd had a triple test there, I'd say by all means go for it, but there's not one. Why can I not? But you do get a lower high here, and I marked this green, but only because it's such a big bar. Again, it's 28 ticks, so it's pretty big. Not as big as some of the ones we've seen, but there's still plenty of room. So if you wanted to risk that, what I would say, this is what I would say on it, and it's an engulfing bar too, so don't trade it on the engulfing. Wait till it closes. Okay, I do like this trade. Just don't enter it on the engulfing bar. Wait till it closes. And what you might do is let it break lower and drop your limit order maybe up to 1 tick below there where you would have got entered on the engulfing bar. And you can see you may not have got filled if you put it right there 1 tick below. But if you put it just somewhere back in this bar, trying to relieve a little bit of the size of that bar, maybe 3 or 4 or 5 ticks. I mean, the low of this bar is 16 1/4. And so if you put your bar, your order 1 tick below that, you would have got filled, and that's 1750. So that saves you a point and a tick to make that a little less that's one way to try to get in and make it a little less risky to take some of that, so your bar is not so big and your stops, because your safety stop has to go one tick above this bar. But you see, that's, considering the size of that bar, that's very little heat. And most of these trades, if you're reading the chart properly, they're going to be you're going to take very little heat on them. It's just the way it is. These trades are, if you're reading the chart wrong and you're entering wrong, then of course, yeah, you're going to have a lot of losses and you're going to take some big stops. But you shouldn't be trading live if you're not good enough to read the chart yet. So that's the big thing. And if there is a bar like this, just skip it. That's why I marked it green. Just skip it and wait on the good one. You had to be patient today, but there's going to be a couple of them coming here before the day's over. And that's just the way trading is. If you want to be a successful trader, you got to follow the rules. You got to be super disciplined in following those rules and doing what you're supposed to do, and you got to have patience. Sometimes you got to wait. I mean, really, if you started trading at 7 today, you didn't get your first really good setup until almost 9:30. So that's 2.5 hours. Now, there's a couple of these I wouldn't have been afraid. I probably wouldn't have been afraid to take any of these 3 trades, to be honest. But if you're not a really good chart reader, I mean, this one's probably more the riskiest one of all 3 of these. This one's truly green. These other 2 are probably close to being red. So, but there's still something about them. This one's the huge signal bar, but it's still a really good setup. And you see, it goes and makes a new low and reverses. Perfect price action. Look at this channel coming down. You get the break, and you get a couple swings to a new low, and it reverses. I mean, that literally is perfect price action. That's exactly what we want to happen or expect to happen. If you'd had a good signal bar here, you'd have had a triple test. You might have gone long there, but you didn't get it. So, but you do get a reversal here. Notice you run straight through that EMA, pull back first entry, second entry. So if it breaks above that bar, it's a failure. It's not a perfect reversal. I mean, the setup is pretty good, but again, it's rather big bar. It's 19 ticks. So again, maybe you let it break higher and you drop your limit order halfway back just to see what happens. And so you cut the risk way down on it, and it still works. Actually, if you just went long here, you'd have been out before it pulled back, I'm pretty sure. Just make sure I'm not remembering wrong. Yeah, so you'd have been out. There's 2 points there. So it wouldn't have mattered. You wouldn't have taken any heat. It doesn't. I think this pulled back mostly before it broke higher. So you wouldn't have taken much heat on this trade at all, and then you're out. No, you wouldn't have got a runner. But we don't get a runner on every trade. That's why we do the scalp and run, though, because we want to get paid on every trade. And if you're trying to catch a runner on it, or if you're trying to swing trade every one of these trades, you're taking a bunch of hits before you finally catch one. Or you're having to take a really big risk to get more points. And that doesn't always work out. You got to have a lot more luck on your side. When what we're trying to do, we're taking all the luck and the gambling out of it, because we're only going for 4 ticks, and we've researched this, we've practiced it, we've trial and errored it, we've sim traded it, we've got it down to a science. But you have to follow the rules. If you don't, and you don't have patience, you're not going to have success. I can tell you that right now. But anyway, I like that one. And it's close to being blue. And that, again, a failure like that on a reversal, that is a very advanced trade. 90% of you don't try that. Just, it's very difficult. Let that come to you organically once you've gotten profitable and started to have a really high win percentage, say above 80%, 90%, in the 90% range. Then you can start trying to add these kind of trades, or at least start trying to trade them on the simulator. Maybe you still don't take these live. You just start sim trade them and learn from them. But don't try to trade these early on, because I'm just telling you, as soon as I show a trade like this and don't say that it's advanced, I'm going to get 10 emails from somebody trying it the next day and it failing, and then they can't figure out why in the heck it failed. Because it's a very advanced trade and you need to know what you're doing. We're not pattern traders. You got to understand the price movement and the price action here. You got to read the chart and understand it. You got to know what's going on. And you can't just pick a pattern and have success with it. So trust me on that one. But anyway, we just keep chopping up, and finally you get a pullback, and it went higher. So there's your first entry, and then it turned back down again, bounced right off the trend line. Now you got a confirmed trend line up through here, and when it broke above that 2-bar matching out, that's a second entry long. You got plenty of room to get out. I like that trade. Again, it's a quick, easy scalp, but no runner. But that's why we try to get a scalp. And yeah, you might have got 8 ticks on this. But there's going to come a time you're not going to get 8 ticks. Yeah, you'd have easily got 8 ticks. But there's going to come a time you're not going to get 8 ticks, and you're going to take a loser. And you'll find out that trying to go for 8 ticks is not worth it, because you end up trying to make up more lost ground than if you just scalp out with 4 ticks. Most of them are going to be winners if you're reading the chart right. 99 out of 10 of them are going to be winners if you're reading the chart right. We've proven that over and over and over. If you're not reading the chart right, no, you're probably not going to hit 90%. If you're not patient, if you're not following the rules, no, you're probably not going to hit 70%, much less 90. But we run on up, pull back, just the first entry, and we finally break higher up here. So you probably want to be looking for this to fail. And you do get a second entry here. Technically, it's not a second entry because your count started over right there. So that's a first entry, second entry, third entry, fourth entry. But you might consider that a lower high, and it's a very low risk bar. 6 ticks. It's a little ways away from the EMA, and most breakouts are going to fail. So maybe you take that. I'm not crazy about it. If it broke higher first, I'd say jump all over that one. Then it jumped. You see it. And you would have, I'm pretty sure you just scalped out of that. Let me make sure I'm not telling you a story. Yeah, so there it is. Exactly 6 ticks, which is exactly what you need to get a 4-tick scalp. If you went for 1 tick more, guess what? You had a loser. But if you followed the rules, there's you another winner. And then it really looks congested there. So that's another reason not to take that trade. I didn't like it in real time, but looking at it now, I might take it. Anyway, it breaks out, and now you got a big bearish bar, closes back inside. It broke higher first and turned down. Don't trade it on the engulfing bar. And again, you're trying to, I talked about this with a trader today. We're talking about picking tops versus, don't try to pick tops. Well, you're not really trying to pick a top here. You're playing the bigger range. So this is a failed breakout. And then you got a tight range here, so you got another breakout. And the fact that it closes back inside, you can trade range rules here, that far away from the EMA. So maybe you go short there. There is a lower high right there, but you don't have a good enough signal bar. But we're playing range rules now. We flipped from the trend going up when it broke out. Now we're considering range rules. But wait on the good ones. These are both a little more risky, a little more. You're still guessing until you get a good lower high or triple test. And notice what happens here. We shoot back inside. We got to go higher once, twice, 3 times. You get a triple test with a big bearish bar. It closes back inside the main range. That's where you go short. There's actually a second entry right there. So this is a lower high. I didn't even draw that. See, the first entry, actually the second entry here was here. And so I take that back. That's the lower high, and then this is the triple test. So if you draw that, there is a little bit of a channel working up. It looks mostly sideways to me. But anyway, you're really playing this range here, and that's a failed breakout here. You might even consider going long on this one. I wouldn't this one because you don't have much room, and you see it doesn't go higher. But here, you might even enter here on this second entry. You'd have to wait for that bar to close. I'm not crazy about it because we're at the high of the range. We're looking for a breakout. I'm not going to mark that actually because I wouldn't have taken that trade like that. But it's a lot easier to say, hey, that looks pretty good after the fact. But in real time, I did not like that trade because we've broken out, and it may fail. It could break higher just like that and turn back down, and that's what you're afraid of. It did turn down momentarily, but went right back up. So you do have a high or low here, but there's not enough room to scalp out, so don't try to enter. If this would have entered way down here and you had plenty of room, I'd say take that trade. But don't take this first one. Wait on a higher low. And then we're just chopping sideways. You get that triple test. Nice entry right there. Quick, easy move. And first entry and then sideways. And it looks like we get an overshoot here. Now, and how do I know that? Because if you draw this down here, notice how we're not really touching anything there. Prices don't just turn in the middle of nowhere. It looked pretty good here with this, but once this started forming, something doesn't look right now. So if you adjust this to where it fits, like that right there, now it fits well the rest of the way down. So I think we got an overshoot there, and really we just start working sideways. This was tempting as a triple test here, but we closed outside that line just barely. But if that would have closed inside, I'd say maybe you go long, but we're in a downtrend too. But we did get it overshoot, so we could reverse here. But you can see we just keep chopping sideways. And there's a second entry short here. Somebody will probably ask me about this, but we just had a possible overshoot. And if we didn't, we just came off the lows. So we're probably going back to the highs. And so that's a very risky trade. I think it works. Most second entries with the trend work, but there's times you want to filter them out. And you can see there's 2.25, 2 points and a tick there. So it works easily. But it's not a good, the chart, it doesn't condone entering short right there. And if you drew your little uptrend, you probably don't have your break and new high yet either. So you see that's the first close outside. It tried to make a new high and it couldn't. It finally made it right here. It does make a new high here. I don't like that signal bar. It's just a first entry. It looks like we're in a range. Again, I think it's too early to try for a long here. Although we are expecting prices to go back here, but they may just kind of keep chopping. No short. And you do get a breakout here, but don't try to pick a bottom on this. But notice how we came up short there, came up short there, and now we're in a trend here. And notice what happens. We push through that EMA and pull back, and we're bouncing right off that support. It closes outside this trend line, and we had the overshoot here, so we could at least get a measured equal distance. And if you measure that, just start from that angle and go to right there. And so over here, you probably would expect something similar. And that gives you a perfect measured move back to here. So I think you're safe taking that. I like that because it's probably going to trap some shorts. And it took it a minute, but look at it go. And it actually pushed on through and went much higher. So I like that one because you're expecting possibly a break right there because you had this overshoot. And you're really finding support here, and you can see all the support there, and most breakouts are going to fail. And it may turn down right here again. It may not push on through, but as long as you got room to get out, you don't want to push it real close. There's 6 ticks there. So, I mean, that's close, but that's such a bullish bar. I liked it anyway. I like that trade in real time. So. But make sure you got room, and a lot of times the more room you have, the better. But make sure you at least have enough room to scalp out. That's the rule. And you do have your 6 ticks there, so you got enough to scalp out. And sometimes people ask me, 6 ticks? Well, I thought we were only going for 4. Well, we are only going for 4, but you need 6 ticks to enter the way we enter and be guaranteed to get out because you're going to enter 1 tick above that. So that's 4 ticks. And then it has to move. I'm sorry, you're going to enter 1 tick above there. So your entry's already used up a tick. And then it's got to move 4 ticks in your favor. And then usually it has to push through a limit order. You want to exit always on limit orders to make sure you get your 4 ticks. And so usually you need another tick. Well, there's your 6 ticks. One where you enter, 4 move, and then 1 to make sure you get a limit order filled. So that takes 6 ticks. So hopefully that makes sense. A lot of people don't quite get that when I start talking about that. They'll ask me, "I thought you said it was 4 ticks." Well, it is. But it takes 6 ticks to scalp out 4 ticks, entering 1 tick above or below your signal bar and exiting on a limit order. Now, occasionally you get out on. If you use an ATM, you'll be surprised how many times you'll get out without having to tick through. It'll happen more often than you think it will because you're early into the queue. If you use that ATM, as soon as your order's entered, your other order's entered too, and you're early in the queue, and sometimes you'll get out quicker. Not always, but sometimes you will. And then you get the close outside. You really could argue there's a close outside here. Definitely want convincing one here, but you get a close outside here, in my opinion, and then 2 legs up. Actually, 2 legs and an extra push, but I don't see being able to go short there. And it's just run straight down and make a new low. And then we got a trend. We're looking for a possible reversal, but you get a close outside and new high and a second entry short right at the EMA. If it breaks below that, it's going to try to retest these lows again. And there it goes. And that signal bar is close, but I still like that being a second entry and this playing out, and I think that's close. If it was 1 tick higher, no, for sure, and it's probably questionable there, but I liked it. Run down, make a double bottom, then just first entry. So, and then we reverse out of there. You don't want to be trying to pick a bottom down here. You'd need to wait on a higher low. You don't get that till way up here, and that's too late. But guess what? You got another trend working up, a clear close outside, a move up, and a second entry short with a pretty decent bar way away from the EMA. It's basically a repeat of that. And off it goes again. And that's just a first entry. There's a first entry, and this went higher and turns down. So there's a second entry there, but there's too much support across there. It would have ended up working, but that's too sideways and congested. And then we bounce. This is played out to the downside. There's a higher low here, but that looks too sideways and not a good enough signal bar. But that trend does continue to work up. You finally get a close outside. First entry, pulls back. And when it broke above that bar, it's a second entry long. Plus you got some support there that you bounced on multiple times. And it's a decent signal bar. Now this is after 2:30, but you could see it's like 2:30.31. If it's within that first minute or two, you could take that trade. Just don't take one, once you get 3 or 4 or 5 minutes in, don't take one anymore. Usually if it's that first bar or two, you're probably okay. And you see we came back here and had a failed breakout. And that was it. See, that's like 236. I think you're pushing it if you take one that late, especially unless it's like a perfect setup. And here you'd probably want a higher low to be a perfect setup, and you don't have that. It just takes off. Now, if you're in a trade here, let's just say you entered. Let's say you did enter. Just say this bar right here took off and it ran up like that. If you've got a runner, don't worry about managing a trade into 2:30. Just don't take any new trades. If you got a runner and it's going, just let it go. But make sure you get out by, it depends on, sometimes your brokers kick you out at a certain time. I don't know. You need to know what time your broker will kick you out. It used to be a lot of them would kick you out around 3 or 3:15, but since the market doesn't close till 4 now, I haven't taken a trade in that late in so long. I don't even know if they'll kick you out or not. But if you're on a winner, it doesn't matter anyway. They'll just take you out. So put your safety stop wherever. If you want to let it run, let it run. Move your safety stop as it goes, and when they take you out, they take you out. Wherever you're at, as long as you're in the green, it doesn't matter where they take you out, really. Because if it backs up too much, you're going to stop yourself out, so don't worry about it too much. But don't take any new trades is the rule, so make sure that's clear. But there it is. Pretty straightforward range type day. You got to draw these short-term trends and trend channels to keep you on the right side. And again, going back to this, this is not the same as trying to pick a top. Yeah, it was trending up here, but this is a range. The bigger pattern is a range, and you're going to probably get a failed breakout here, even if we're going to go higher. So you're okay to try to get short up here. And that's what sometimes people miss. You know, they'll see something like this and think this is the pattern may look the same, but the context of the chart is not the same. Now, if you're on a trend like yesterday, don't be trying to pick a top up here. That's different. Wait till you get a reversal. So I hope that's clear. You want this uptrend to play out with a break of the trend channel and at least 2 legs up to a new high, and then you want a confirmed trend line working in the other direction. And if you got that, you're probably okay to go short. But most of you should probably always wait till you get a confirmed trend channel in the other direction, which we had that pretty much here. You wouldn't have had it here. You're just trying to play the failed breakout, really. So hope that's clear. That's 30 minutes worth. I'm going to wrap this up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.